Friday, June 17th, 2022, Monaco 64, home of alternative economics and contrarian views. So, the Bank of Japan has gone into hyperinflationary mode. It's crazy what they're doing. And Kuroda-san, the governor of the Bank of Japan, is on a kamikaze mission, in my opinion, at least for the currency. I'm sure he'll be okay. Before I start today, just like to say that Billy is fine. I got up very early today, so I left him upstairs. And the other thing I like to tell you about is that the Mike and Mario show came out last night. Yes, a bit early because I won't be able to do it this afternoon. And what happens with the Mike and Mario show, I go on the Rethinking the Dollar channel every Friday evening, London time, and then I post a recording of it on the Saturday on my channel. But we did it a day earlier, and I actually posted the recording yesterday. So if you want to listen to the Mike and Mario show, search for it on my channel. We spoke, of course, about what's happening, the crazy market action in stocks yesterday, and the fact that precious metals did really well yesterday as well. That's encouraging, in my opinion. So, Bank of Japan, they had their meeting today, and recently we've seen the JGB yield. JGBs are Japanese government bonds, and the Bank of Japan, of course, they want to keep JGB yields capped. And why is that? Well, because Japan has a national debt of almost 300% of GDP. Yes, 300% of GDP. And the biggest owner of Japanese government bonds or debt is now the Bank of Japan, because they've been doing QE for almost a quarter of a century. They've been printing money to buy this debt, monetize government debt. And it all started in the early 90s when the stock market and real estate bubble in Japan collapsed. Instead of letting things liquidate, the Japanese never let it collapse. And, and here we are, 30 years later, they're still at it. And in my opinion, it's going to lead to a total collapse of the Japanese yen, the fiat currency, the yen. And some people might think, how can that happen if they're in a deflation? Well, there's only one way to measure the yen against real value, and that's the price of gold in Japanese yen. And as I speak here, we're fast approaching 250,000 yen per ounce. I think back in the early 90s when the Japanese bubble burst, we were around 40, 50, 60,000 or thereabouts. So to tell me that the yen is a strong currency is like, totally counterintuitive. And I expect the yen to collapse. I don't know when, but the way the Japanese officials, especially the central bank officials, are conducting their policy is totally irresponsible. And I think it's worrying for Japanese savers. They need to be worried. And I'm sure a lot of them are probably buying a lot of physical gold and even silver. So, yes, of late as well, we've noticed in the JGB market, and this market, of course, does trade outside Tokyo hours. And we've seen in recent days, during US hours, the JGB yield go through that 25 basis points. Like you can see here yesterday, I think it went up to almost 0.35. And in a very illiquid market, and I think these are speculators on Wall Street, maybe in the city of London, selling these JGBs while the BOJ is not around, so to speak. But these spikes have been negated here, as you can see, as Japan opens at night, my time. the Bank of Japan comes in and starts buying JGBs. That's how they keep the yield at 25. They buy unlimited amounts of JGBs, or they say that they will use as much funds created out of thin air to buy these JGBs and keep the yield at 25. But I was reading earlier here today the story because they had the meeting, the Bank of Japan, and the FT covered it. And it says BOJ sticks to loose monetary policy, sending yen sharply lower. Japanese central bank sees inflation as transitory, even as Federal Reserve and others raise rates. Yeah, it's not a joke. They see it as transitory. And it's interesting that in this article, it says that even during Tokyo hours, they're having a tough time keeping this cap at 25 basis points for the 10-year JGB. It says here on Friday morning, the 10-year JGB yields touched 0.265%, marking its highest level since January 2016. So I'm not too sure about the spikes yesterday and the day before during US hours. But either way, I think the markets want to test the Bank of Japan. They're testing them, or else the Bank of Japan wouldn't be needing to do this yield curve control, as it's called. And yield curve control is different from QE. It's a promise to keep yields at a certain level, but if speculators or investors start selling JGBs and those yields start going above that 25, it means that they don't really trust this promise. So what the BOJ has to do is basically QE, because they will create these yen reserves out of thin air to buy the JGBs and drive the yields back down. So what are the reasons given by the Bank of Japan for keeping this policy, this really dangerous, irresponsible, profligate, whatever you want to call it, extremist monetary policy? Well, they say it's because they think it's transitory, but also that the economy is not strong enough. So they think it's necessary to keep creating yen out of thin air, to keep interest rates negative, right, and to keep doing QE. So that's the Bank of Japan. And what I have to say about that to Kuroda-san, the governor of the Bank of Japan, is that usually in a hyperinflation, in a currency collapse, the economy is in really bad shape. So Mr. Kuroda, the more you do this, the more you put your country's currency in danger. And I wouldn't be surprised to see the price of gold in yen reach 300,000 very soon. I would say before the end of the year. And there's talk already here from analysts, from people like JP Morgan in Tokyo, that we could see the yen hit 140 or the dollar hit 140 yen very soon. And what about intervention? Well, if the BOJ really wanted the yen to stay strong, they wouldn't be doing what they're doing. So intervention is just a distraction. What this policy does do, though, it kind of helps a little bit Western markets, because you're going to get Japanese investors parking funds away from the yen because the yen is going down. You're also getting very little yield on bonds in Japan. So they're going to help out, actually, in a way, things like treasuries, gilts, maybe even European government bonds. But as I've said before, all these fiat currencies are sinking. They're all going to crash and burn eventually versus real money, gold and silver. So let's look at where the markets are then this morning. As I said, I got up quite early today. I had a few things to do. So it's 7:24 a.m. London time. And yesterday, of course, the stock markets had a tough time. There was a little bit of a rebound on Wednesday after the FOMC announcement. Stock markets rallied a little bit, but that was, I would say, like a dead cat bounce. And yesterday, we saw markets go down again quite sharply. The Dow finished down 2.5% almost, S&P 3.25%, and the Nasdaq finished down 4%. So let's see where things are right now. We've got spot gold at 1846.50. It's down about $10. High's been 58 and the low 41. Silver is down 7 cents at 21.88. The high's been 22.00 actually. Talk about capping the price, right? The paper price. Low's been 21.70. The Dow future is up 125 points, just under 0.5%. Nasdaq 100 future up 0.5% as well, and the S&P is up 0.5% at 36.86. The FTSE 100 index is up 27 points at 70.73. The Eurostoxx 50 is up 27 points at 34.53. To the currencies, sterling is down 0.2% at 122.79. The euro is down 1/3 at 105.10, and the dollar is up 1.4% versus the yen at 134.06. The high has been 134.66. Recently, we got up to 135, and I think it's only a matter of time till we go to 140, and that means a weaker yen, of course. That means the dollar is buying 140 instead of 134. Swiss franc, there was a surprise rate hike yesterday by the Swiss National Bank after I did my video, so I didn't cover it. They raised rates for the first time in 15 years, believe it or not, and their rates are still negative. They raised it from -0.75 to -0.25. So yeah, the Swiss franc has rallied. I think yesterday we were around par with the dollar. Right now, the dollar is at 96.88 centimes. So the Swiss franc is strengthened. They also said they're going to sell a lot of their FANG stocks. They hold hundreds of billions of tech stocks on the S&B, which is crazy in my opinion. They're like a taxpayer-funded hedge fund, the Swiss National Bank. The dollar is up 0.25% versus the yuan at 670, and we're gonna check the Russian ruble here. The dollar is at 56.50 versus the ruble, so very steady, the ruble versus the dollar. And we'll go to the other currencies now. Aussie dollar is down 0.75%, just below 70. The dollar is up 0.2% versus the Canadian dollar, 129.70. And the Kiwi dollar is down 1/3 at 63.25. To the general commodities, WTI crude is down 0.25%, just below 115. Brent crude is down 1/4 as well, just below 118. High-grade copper is down 0.1% at 412. And US nat gas is down 1.25% at 735. And to finish off, we're going to look at the 10-year yield, US 10-year yield. That's at 325, down about 6 basis points. So yeah, we've come off quite a bit from the level we reached pre-FOMC earlier this week. It was around 3.5%. What about the 10-year JGB yield? Well, it's down even 3 basis points right now. It's at 0.22. So the Bank of Japan has a bit of wiggle room there. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And yes, I'd like to wish you all a great weekend. Take care. Bye.